Did you know the world's top investors can do calculations faster than most people can type a number into a calculator? Warren Buffett, the legendary investor, says that one of his secrets is the ability to instantly assess financial numbers in his head. But here's the shocking part. You can do this too, without a fancy calculator or complicated software. In fact, research shows that being able to quickly calculate key financial metrics can make or break a deal. In the fast-moving world of investing, every second counts. The faster you can do mental math, the quicker you can spot opportunities and avoid risky investments. In this video, we'll show you how to calculate faster than a calculator, using simple mental math tricks. We'll teach you strategies that top investors use to analyze stocks, assess value, and evaluate risks, all in seconds. Stick with us, and you'll learn how to sharpen your skills and boost your investing game. Ready to calculate like a pro? Let's get started. Chapter 1. Mind over money. The mental math edge in investing. When you're analyzing stocks, speed matters. Imagine trying to value a company's stock during a market shift. Every second counts. The faster you calculate key metrics, the quicker you can act on an opportunity or avoid a potential pitfall. A good mental math skill set can set you apart from others. It allows you to spot undervalued stocks before others do, giving you a competitive edge. In fact, legendary investor Warren Buffett credits his success to the ability to quickly assess numbers and make decisions without hesitation. So, sharpening your mind can help you think faster and smarter. Chapter 2. The 3-second rule. Multiply and divide like a pro. A key skill in mental math is multiplying and dividing numbers quickly. For example, consider the price-to-earnings (P/E) ratio, a common metric used in value investing. It's simply the price of a stock divided by its earnings per share. But if you can multiply or divide numbers in your head, you won't need a calculator. Here's a trick. When multiplying two numbers close to 100, use the difference from 100. For example, to calculate 97 by 98, subtract both from 100, 197 equals 3 and 198 equals 2. Then subtract the product of those differences, 3 times 2 equals 6, from 9700, the base number when multiplying 100 by 100. So, 97 times 98 equals 9506. This mental trick saves you time and keeps you focused on making decisions. Chapter 3. The discounted cash flow (DCF) formula in your head. One of the most important calculations in value investing is the discounted cash flow (DCF) formula. It helps investors estimate a company's intrinsic value by considering future cash flows and discounting them back to today's value. But this doesn't have to be complicated. Instead of getting lost in the numbers, simplify the process. You can quickly estimate future cash flows using a 5 to 10% discount rate. The key is identifying how much cash a company will likely generate in the future. A simple mental shortcut is multiplying a company's current cash flow by a reasonable growth rate. If you're looking at a stock with a steady increase in cash flow, this can provide a fast estimate for whether a stock is undervalued. While the full DCF formula may require more time, this trick helps you quickly gauge if a stock is in the right ballpark. Enjoying the video so far? Make sure to hit that subscribe button and turn on notifications to never miss out on tips that will take your investing to the next level. Chapter 4. Percentages and ratios. Unlocking the value investor's toolkit. As a value investor, understanding key ratios is crucial. Ratios like return on equity, ROE, or the price-to-book, P/B, ratio help you quickly assess a company's financial health. But calculating them in your head can save precious time. For example, to calculate ROE, divide net income by equity. Here's a fast trick. If the company's net income is $5 million and equity is $25 million, you can divide 5 by 25 and mentally shift the decimal for a quick 20% return on equity. Similarly, if you want to calculate a P/B ratio, simply divide the stock price by the book value per share. With practice, you'll quickly grasp these numbers without needing a calculator, allowing you to make informed decisions fast. Chapter 5. Compound interest. The silent superpower for investor. Compound interest is one of the most powerful forces in finance. It's the idea that your money earns interest on both the initial principal and the interest it has already accumulated. Albert Einstein famously called compound interest the eighth wonder of the world. Investors who understand how it works can harness its power for massive returns over time. The trick is to calculate it quickly in your head. For example, to estimate compound interest, just multiply the initial investment by 1 plus the interest rate, raised to the power of the number of years. While this sounds like a complex formula, mentally, you can simplify it by focusing on the key numbers: initial investment, interest rate, and time. Being able to quickly estimate compound growth will help you spot the long-term value in stocks and other investments. Chapter 6. Risk-Reward Ratio. The 5-second risk assessment. Every investor knows that risk is part of the game. However, you need to quickly assess whether the reward justifies the risk. That's where the risk-reward ratio comes into play. This ratio compares the potential profit to the potential loss of an investment. To calculate it in your head, use a simple formula. Divide the amount you stand to gain by the amount you stand to lose. For example, if you're considering an investment where you stand to gain $500 and risk $100, the ratio is 5 to 1. This quick mental math trick allows you to instantly assess whether the potential reward justifies the risk. The key is using this ratio as a guideline for making sound, value-driven decisions. If you found these tips helpful, don't forget to subscribe to the channel. We'll continue sharing valuable investing strategies, so you can calculate your way to success with ease. Conclusion: mental math is more than just a fun party trick. It's a vital skill for value investors. By mastering quick calculations, you can analyze stocks faster, make decisions with confidence, and stay ahead of the market. These strategies are simple but powerful. With practice, you'll soon be able to calculate faster than a calculator, giving you an edge in the world of investing. Whether you're calculating key ratios, estimating future cash flows, or assessing risk, mental math can make all the difference in your investment success. So, start practicing today. The faster you calculate, the faster you'll recognize great opportunities and avoid costly mistakes.